Welcome back. Before we take a look at the day's business news, let's take a look at the stock indices across the GCC. And in our top business story, the UAE has issued rules for the issuance and trading of covered bonds, potentially a major step towards developing debt markets and giving commercial banks a new source of funding. According to Emirates news agency WAM, the Securities and Commodities Authority, the UAE's financial market regulator, set conditions for banks and other companies to obtain licenses, allowing them to issue covered bonds. The SCA also set requirements for issuers to disclose information affecting the prices of the bonds. Covered bonds are backed by cash flows from mortgages or public sector loans. They're viewed as relatively safe because investors have a preferential claim on the assets in the event of a default. Dubai's real estate market is rebounding strongly, and UAE banks are expected to finance tens of billions of dollars worth of property projects in coming years, with covered bonds able to help to obtain funds needed to provide such financing. In a statement, the Minister of Economy, His Excellency Sultan bin Saeed Al Mansouri, stated that by creating a new investment tool, the covered bond rules will add depth to the UAE's financial markets. The SCA's board also ordered studies of best international practice so that a regulation covering the listing of bonds in the country's securities markets can be passed in the first half of the year. Emirates SkyCargo carried 2.1 million tons of cargo across its network in 2013, bringing 10.3 billion dirhams in revenue, an 8% increase from the previous year. The figures revealed by the cargo unit of Emirates Airline also shows that for the first time, revenue exceeded 10 billion dirhams, as cargo tonnage increased 16% year-on-year, despite a stagnant air freight market. Emirates SkyCargo was ranked number 1 amongst the top airlines for scheduled freight ton kilometers flown internationally, according to the latest World Airline Transport Statistics published by IATA. Its network expanded with new cargo destinations to Hanoi in Vietnam, Chicago in the United States, Kano in Nigeria and Quito in Ecuador. With an increase of Emirates Airline passenger network in 2013, SkyCargo's capacity has also increased, as it makes use of the belly hold capacity in these passenger services. Additionally, the company also expanded its fleet in 2013 by adding 3 Boeing 777 freighters, now operating 12 freighters including 10 Boeing 777 freighters and 2 Boeing 747-400 ERFs, serving 43 destinations. This year, SkyCargo is set to switch operations from Dubai International to Al Maktoum International at Dubai World Central, the city's newest airport. The shift will begin in April, and by mid-September, the new cargo terminal will be able to handle 700,000 tons of cargo, which can be increased by 300,000 in the second phase. A new survey polling Emirati job seekers has shown that 55% wanted to work for the government in areas such as civil service and utilities. Despite efforts to encourage Emiratis to join the private sector, they remain overwhelmingly drawn to government jobs, according to a new poll released by the regional jobs website BAIF and the market research company YouGov. 35% of the Emirati respondents said they would also like to work in the defense or security sectors, and 29% named hydrocarbons. The results contrasted with respondents from across the Middle East. YouGov polled 7,370 people in the Emirates, Algeria, Bahrain, Egypt, Jordan, Kuwait, Lebanon, Morocco, Oman, Qatar, Saudi Arabia, Syria and Tunisia, as well as Pakistan. Among both national and expatriate respondents in the UAE, more people wanted to work in oil, gas and petrochemicals than any other sector. The preference for energy put the Emirates at odds with the rest of the Middle East, where people were more likely to be looking for technology or internet-related jobs. In the UAE, 22% of respondents were keen to get jobs in the energy sector, with government and banking each attracting about half the number of votes. UAE respondents also rated oil, gas and petrochemicals the strongest growing and best paid industry, but believed government offered the best work-life balance. The finding also revealed that UAE workers were happy with their jobs, but also ready to shift to new sectors for better pay. 47% said they were satisfied with the work-life balance. 56% approved of their working hours, and 50% enjoyed the company's work culture. Currency markets have kick-started 2014 on a bearish note, as the euro and British pound slipped 1.27% and 0.88% respectively against the US dollar. In rather illiquid trading conditions following the holidays, investors poured into the US dollar on the back of profit-taking following the gains from the week before. Gold bounced back after testing $1,180 a troy ounce to consolidate above $1,240 to start the new year. With markets returning to business following the holiday period, the week ahead promises to bring back volatility, with a host of key economic data points expected, including Friday's US non-farm payrolls report and the interest rate decisions of the Bank of England. To gauge what lies ahead in the first week of 2014, we spoke to Gaurav Kashyap, the head of futures at Al Pari Middle East.
Well, it's non-farm payroll week again this week, and we can expect a lot of the volatility to come back to markets. But preceding the non-farm payroll report will be Wednesday's US ADP employment report, which should see some volatility coming back into markets. Of course, this will be followed by Friday's non-farm payroll report, where 195,000 jobs are expected to have been added, with the unemployment rate falling to 7%. Now, overall, we're expecting to see job gains between this 195,000 to 210,000 channel, and once again, a figure falling in this range above 200,000 will surely see risk sentiments continue to amp up markets. U.S. equity markets should also benefit from a stronger than expected U.S. non-farm payroll report. Now, we're expecting to see a good report because last week's weekly jobless claims dropped to 339,000, which shows that hiring has been steady in the U.S. and overall layoffs have been on the lower side. Also on the week, we're expecting the rate decisions from the Bank of England expected to remain unchanged at 0.5%, and of course the European Central Bank will be announcing their rates on Thursday, which is also expected to remain unchanged at 0.25%. Now, if I can just make a note, the euro actually kick-started 2014 on a very bearish note. We've seen it dip to about 1.35 levels against the US dollar. Now, what we're seeing here is an improving flow of data from the Eurozone is continuing to weigh down the euro as it makes markets anticipate further accommodation by the ECB. Now, last week we saw a host of better than expected PMI data coming from the Eurozone, which is what led to this sell-off. But overall, we're not expecting the ECB to spring any major surprises. They should be looking to hold their rate unchanged at 0.25%, and as a result, we could see further upsides in the euro in the week ahead.